Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and in last episode, I tried to split my portfolio and dividend recaps up into two separate videos, but today I'm merging it all back in one video to share all the juicy information from all of the wife and I's investing portfolios and the passive income made in all of February. From the Roth IRAs and 401ks to the account we're eventually going to use to retire early, it's all going to be detailed in today's video, so let's see what's coming up with this right here. In today's episode, we're going to begin by diving into the cash deployed tracker so we can see how much money was spent each and every day in the month of February. That's going to lead right into what the current portfolio value is across all of our accounts. Then we're going to dive in and see who raised their dividend over the past month, which is going to lead into what stocks we bought in February. Then we're going to see with those buys what our new patty projections are. Then we're going to follow that up with who paid me and how much they paid me in the month of February, which is going to round up into the total income received in February and compare that to this time last year. Then we're going to see how much we made in dividends in our investing career across all of our accounts. That's going to lead into the snowball trackers, which is another channel exclusive. Then we're going to see the full diversification of all of our portfolios combined, check on that short and long-term performance of these portfolios versus the markets, and then we're going to conclude the episode with a preview of what's to come in March. But as you saw, we have a ton to get to in today's video, so let's get to it. Last month in my portfolio recap video, I debuted these charts, which are going to be referred to as the cash deployed trackers. Simply put, this top one shows just how much money was invested across all accounts each day the market was open, while the bottom one summarizes all that data into nice, big numbers for easy digestion. In last episode, I was really optimistic that I'd be able to have a very respectable streak of days invested without missing, and what's painfully funny about that is, literally the day that video went out, I was so focused on getting it out before I went to the gym, I forgot to invest on February 5th, thus ending the streak already. But as they say, when one streak ends, another one begins, so we move on. If you look up here on this top chart, you can see that any of the white NA fields will be days the market was closed, either due to holidays or just the weekend. Any green days are days where investments were made, and that one stinking red day showing that big fat zero because of that blunder. Over on the far right, you can see that total amount invested last month as well as this month, which will very nicely feed into the bottom chart to tell us how much money has been added so far in 2025, how much we're currently averaging per month, and the thing I'm excited to keep up with, how much, based on this current pace, we're projecting to invest for all of 2025. Also on this bottom screenshot, you can see the yellow fields on the far right showing there has been 39 investable days so far in 2025. I have made investments in 38 of those days, leaving us with an invest percentage of 97%. As I said earlier, I'm upset I already messed up the streak, but at least I didn't make it all the way to like December and miss a day, so let's see if we can keep this streak alive for a little bit longer. Overall, looking at these charts as a whole, I'm happy that we're already near $7,000 invested to this point in 2025, and super excited to see if we can hit that projection of about $41,000 invested this year. What makes me even more excited about that already high number is the wife and I are also putting back a ton of money per month towards our house building fund, so once that's done and built in the coming years, I can only imagine what we'll be able to stack away in investments. If you have any questions on either of these charts or anything else you see in today's video, please ask away in the comments down below. Next up, let's go ahead and see the total portfolio value of all of our investment accounts with this right here. So across all of our investing accounts to conclude January 2024, we were sitting at $234,453.07. Moving that up 1 year to conclude January of 2025, aka last month, we were at $341,885.84, and now to conclude February of 2025, our combined account balance is sitting at $339,724.53, which is actually down from last month's recap, so there's that. As you saw with the cash deployed tracker, that is not scaring us away from dumping money into the markets to scoop up those lower prices, so I imagine we'll be sitting pretty when the market decides to head back in the right direction, whenever that may be. Now I have this exact screenshot for each of the different types of accounts we have, but that'll take too long to review, so I'll just outline the current balances of each of those accounts on screen, along with the difference between this month and last month, so you can see where the money is and the biggest changes over the past month, and we can move on. If there's any other information you guys would like on this in future recaps, just let me know and I'll work to add that in. Next up, let's see which holdings in the portfolio decided to bless us with dividend raises over the past month with this right here. I'm still working on the best way to find out all this information and bring it to you guys, but from what I found, there were 3 companies that decided to give us a dividend raise in the month of February, so let's quickly go over that and say thank you. First up, on February 5th, OD ODFL, which is held in the Anyone Can Invest account, decided to give us a 7.7% dividend raise, and instead of paying us 26 cents per share per quarter, they wanted to give us 28 cents per share per quarter. Thank you, Old Dominion Freight Line. Then, on February 11th, KNSL, which is also held in the Anyone Can Invest account, decided to give us a 13.3% dividend raise, moving their dividend from 15 cents per share per quarter to 17 cents per share per quarter. Thank you, Kinsale Capital Group. Finally, on February 24th, STLD, which, you guessed it, is also held in the Anyone Can Invest account, decided to give us an 8.7% dividend raise, increasing their dividend from 46 cents per share per quarter to 50 cents per share per quarter. Thank you, Steel Dynamics. For anyone new to the dividend game, you might be thinking that these raises are too small to amount to anything, and you could not be further from correct. These seemingly small raises on a percentage basis are likely bigger than the raises we get at our day jobs, and these are companies I don't even work for, and every little bit helps towards financial independence and an early retirement. Now that we're done going over the completely free money I got this month, let's see where I invested our money over the past month and how much passive income that added with this right here. There's a lot of information on this screenshot here, so feel free to pause the video now if you need more time to dive in, but here are some of the key takeaways I wanted to outline. Our top 5 investments in terms of dollars over the past month were the S&P 500 positions, where we added $1,077.42, followed by the wife's mid-cap option at work, where we added $368.10. Then comes SCHD at $349.95 between a few different accounts. Microsoft came in at $217.91, and Visa at $217.67 rounds out the top 5. The holding we were able to add the most shares in goes to SCHD, where we bought an additional 12.59 shares over the past month, and we were able to add the most forward income with VOO, bringing in an additional $5.65 just over the past month with these recent buys. In total, 24.3376 shares were added in February, $3,138.21 was invested, and we added another $47.58 in added forward income just this month. Now that you saw the buys I completed over the past month, let's see what that did to our PATI projections with this right here. Another awesome thing about dividend stocks is with every single purchase you make, you get to constantly see your PATI, or projected annual dividend income, go up. On the screen right now will be the PATI projections, including January of 2024, last month, and now, concluding February, broken down yearly, monthly, and daily. You can pretty clearly see the drop from January of 2024 to January of 2025, and might be wondering how that works if the number only rises as I buy stocks. Well, this one is simply because of the major portfolio overhaul I did in December of 2024 into what you see today, causing me to lose some PATI, but I'm 100% okay with that because I do not need the income generated from these portfolios today, and I feel better about the strength of my portfolio moving forward, and I'm happy to be building off that stronger base in the coming years. Throughout this year, you should only see these numbers continue to rise as the recaps keep coming out, so there should not be any more drops to report on. Once again, I have the same exact chart for each of the individual accounts, but at the same time, those will be placed right here on the screen so you can see which account is generating which amounts of money. Just as a side note, that drop I talked about earlier was mainly in my Retire Early account, which went from around $1,200 a year in PATI down to the low 400s you see now. Now that we just went over what kinds of dividend income we'll be expecting in the future, let's go ahead and see what actually came in this month with this right here. Looking at all 7 of our investment accounts, 11 different payments were received in February. 4 of those payments were in the Anyone Can Invest portfolio, which I began from $0 last year to show that anyone can create a growing source of completely passive income. If you haven't seen that series yet, you can check out that playlist linked right here on the screen, so I won't be going into details on those lines. The first payment that was received outside the Anyone Can Invest account was on February 13th of 2025 from Apple in the amount of $16.43. And if you look here, you can see how this dividend is growing in large part because of that portfolio reconstruction I talked about earlier. My very first payment from Apple was back on February 10th of 2022 in the amount of $1.08. My last payment from Apple was in the amount of $8.51, and now you can see that recent payment in the amount of $16.43. In total, Apple has now paid me $77.31, which is 2.13% of the total dividends received in this account, and the dividends have gotten me 0.401 shares for free via the drip. The next dividend payment outside of the Anyone Can Invest account was on February 21st of 2025 2025 from Costco in the amount of $20.20. And if you look here, you can see once again the massive difference between the previous payments and this most recent one. My very first payment from Costco was back on September 8th of 2023 in the amount of $5.63. My last payment from Costco was in the amount of $9.77, and now you can see that most recent payment in the amount of $20.20. In total, Costco has now paid me $165.84, which is 4.58% of the total dividends received in this account, and the dividends have paid for 0.23 shares thanks to the drip. The remaining cash received in this account for the month of February was all interest because of the cash sitting in the accounts. Since those aren't growth positions, I don't feel the need to show those same charts as you saw for Apple and Costco, but I do have those just in case you're wondering. To save you time and brain space, let me go ahead and add all these numbers up and show you how much was made across all accounts in passive income for the month of February with this right here. So after I added up all the amounts I shared with you in last slide, the total amount of passive income received across all accounts in the month of February came out to $93.82. If you look to the right of that number, you can see that this is down 48.8% from last February. And again, this is because of that big change I made to the retire early account towards the end of last year. I personally can't imagine that any of the amounts from 2025 will be higher than the same month from 2024 because of that change, but I can tell you that March, June, September, and December will still be very good paying months for us. And when you compare like months in 2025, we are very likely to see growth on that scale since they should all have the same payers after that portfolio reconstruction. With the wife and I being 20 or so years away from needing the income produced by this portfolio, I was okay with this big drop in income as we focus on growing the portfolio balance by as much as possible over the next 20 years, and then we can make any needed portfolio changes at that point to boost the income when it's needed. I don't have this number for the whole portfolio, but I'd be willing to bet that our portfolio yield is somewhere around 1% right now, and if we were to keep that same 1% for the next 20 years, it would obviously churn out more and more money as the balance grows because of math. But what is really nice, we could then move that money into something that yields a still safe 4% yield, and we could 4x our passive income when it's needed just like that. Focusing back on this chart, our Q1 total and year-to-date total so far is sitting at $165.42, which once again is down 84.3% from Q1 of 2024, but we still do have March's total to add to bring us a little bit closer. If nothing changed for the rest of the year, we have a projected income of $992.52 based on these numbers, but I'm 99% sure we'll be a good amount over $1,000, but we'll just have to wait and see. Now that you got to see what was made in February and so far in 2025, let me quickly show you how much has been made in completely passive income over the life of our investing journey so far with this right here. This chart should be pretty self-explanatory, so I won't go into too many details. Here you'll see the total amount of passive income the wife and I have made and from what account since we started investing in my 401k back in 2017. Feel free to pause the video here if you need more time to take a look at this chart, but I just wanted to take a second to both share the chart with you all and outline the grand totals down here at the bottom. We are now up to $10,656.95 in career dividends, and I think what's really cool is that we're now up to 92.85 shares for free because of the drip. With that total I just spoke about, I wanted to next quickly outline and share my dividend snowball trackers with these right here. So I've shared these charts a few times on the channel to this point, but quickly and simply put, these charts show how much time passes between each of the milestones. For this first chart, you can see that it counts by 1,000s and how long it took to get the first $1,000 and the second $1,000 and so on. For the second chart, this one tracks by $2,500 increments and how long it takes to get to each of those milestones. In this month's episode, I sadly don't have any new milestones reached, but I'm pretty sure we'll get there in next episode as I'm expecting a pretty good March in terms of passive income. As I've said in last episode, my goal is not to make each and every milestone happen quicker than the last, as that's pretty much out of my control, but I want each milestone to take less time than the averages there at the bottom, thus lowering the averages and continuing the cycle. Now, let's quickly see how every dollar of these portfolios is split up with these right here. So last month was not only the very first time I ever shared all 7 of our investment accounts, but it was also the first time I dove in and saw the diversification as a whole, let alone shared it with you guys. On a month-to-month basis, I'm not really expecting a lot of changes to this part of the video other than the amounts getting a little bit bigger, but I don't want to assume that everyone that sees this video saw last month's video or vice versa, so I'll continue to share this. On the black chart, you'll see all the percentages that make up each of our positions, and as I said last month, I'm very happy with the balance of this portfolio as a whole. I like that 50% of the portfolio is split between the S&P 500 and mid-cap stocks for stability, growth, and reliable performance, performance. Then we get into SCHD for a little bit of yield boost, followed by my leverage positions for some aggressive growth and a little bit more risk, which is followed by my highest conviction individual stocks, and so on. Here on the white chart, you'll be able to see the exact dollar amounts that make up that pie chart, which shows the S&P 500 positions just cracking 87K this month, all the way down to my smallest holding of crypto, which is at $102.18. One thing I don't remember if I mentioned in last month's video is that all of the values you see on this white chart, and therefore on the pie chart, are only based on the amount of money invested into these holdings and does not include the current market value. I personally don't believe in balancing your portfolio based on market value because of how much the market can and does move on a daily basis. You could have a few really good months on a stock like Tesla and then trim the position because it's quote unquote overweight, and then it goes down a lot like it just did recently, and now the position is severely underweighted in the portfolio, and to me, that's like a game of cat and mouse I would rather leave to Tom and Jerry and keep it out of my portfolio. If you have any questions or comments on the numbers of my diversification as a whole, drop those in the comments down below and I'd be happy to answer those as they come in. Now that you saw what our money was in and how much of it was in that stuff, let's go ahead and quickly check out how my portfolios are doing versus the overall markets over the short and, more importantly, the longer terms with this right here. So last episode, I was trying to figure out the best way to combine all this data and present it to you without hurting your faces, and this one isn't exactly busting at the seams in cuteness, but it's better than what we had last month. On this chart, you'll be able to see all the money-weighted returns for every portfolio we have, minus my 401k because Merrill Lynch stinks, over the short and long terms compared to the indexes, and it's important to note that these longer time frame percentages are displayed on a yearly basis, not the total percent return. For whatever reason, the NASDAQ results are not available through Fidelity when I pulled this screenshot, so I had to manually find those on Seeking Alpha, so that's the best we got. It looks like in the month of February, all three indexes were in the red, as were three of our portfolios, but we did have the wife's Roth and our retire early account pull out a green month, which is awesome. Year to date, it looks like we have three portfolios in the green, with only one outperforming the indexes, once again being our retire early account. And over the longest term we have for all of the main accounts being 3 years, it looks like on an annualized basis, 4 of the 5 accounts are outperforming the indexes, and you love to see that. Again, attempting to outperform the market is most of the time going to be a losing battle, but that does not mean it can't be done. It would be great to outperform in every portfolio over every length of time, but to me, it's most important that we do so over the longer periods of time since we're long-term investors. Before I let you all back into the wild, I wanted to quickly preview who all should be sending us money in the month of March. So once again, I'm sure there's a better and cleaner way to show all this info, but we shall be okay with this for now. It looks like we're expecting payments in all 7 of our accounts from 21 holdings, totaling somewhere around $679.23, but that will not include any interest, which we will also be getting, so I could easily see us over that $700 mark and ending Q1 on a very high note. As I said, I expect March, June, September, and December to be really good for us, as it is with most dividend investors, and I cannot wait to share all of the juicy details in next month's recap. If you guys have any questions, comments, or concerns on anything you saw in today's video, please don't be shy, use that comment section down below. Also, I would love to see any news that you guys are willing to share about your portfolios for the month of February, so drop those in the comments down below as well. And I have no clue what to suggest to watch next, but I'm sure YouTube does, so be sure to check out whatever that is right here. But until next time, see ya.